For the investors, it's been over 16 years now that we're in business. So what we've been doing with them, and it started with the investors, where what we were really doing was helping bring value to their analysis by bringing some new thinking about issues that investors may want to consider in their investment process that are connected to what we call environmental, social, or governance topics. So ESG. So really educating and helping them build some investment strategies. And helping those investors consider how they might engage then with those corporations that they hold in those portfolios on our behalf as pension funds or mutual funds, with a view of having those corporations perhaps advance or acknowledge and get educated and develop some new strategies themselves that could help them do better business or manage the risks that they might have. And as I developed in this space, I recognized that there were a lot of people critiquing the corporations, lots of rating agencies and people critiquing, but there was no one actually going out and trying to help the businesses meet this growing and changing need of the investors. And so, that's really how, we kind of see ourselves as a figure eight. We work with the investors and we work with the corporates all around this dialogue and building bridges and helping each, develop strategies so that we can keep capital flowing to Canadian businesses and helping our Canadian investors get returns. That's really our objective behind everything that we do.
That's such a special bridge between the two groups, and I think so necessary. So I can understand why you set up the organization 16 years ago. I am curious, because it feels like at least the sustainability space overall has changed, but specific to consulting, maybe what has changed the most, and has anything really stayed the same as well?
Yeah, well, maybe 16 years ago when I started Millani, everyone thought I was completely ridiculous.
Oh, really?
Oh, yes. I had a very, shall I say, a well-paying position at one of the banks, and a very prized position, and to have left that and to focus at the time on what was called socially responsible investing. I never really espoused that part, but that's what it was called. And this is really where individuals didn't want to have exposure to a certain type of company. So say they didn't want to have tobacco or alcohol or entertainment or adult entertainment or whatever in their portfolios. And that's really driven by a person's or an organization's values, right? But at the time, I intuitively knew that SRI wasn't where the system level change could take place because it was too restrictive, and it was and what we needed to do, in my view, was move away from that values driven lens to something that could be much more of a risk management tool. And this is really where I saw the opportunity to help the market adopt some new investment practices. So kind of thinking about adding an additional lens to current investment processes, which evolved into the integration of environmental, social, and governance issues that can have an impact on the business, and ensuring that the investors are understanding if it's being managed as a risk or how the company is developing within the opportunities. So that's that, and so there when we first began, much of that work was on education.
Okay.
Then it turned to supporting and the developing of some sort of reporting. But to do good reporting, you need to have a strategy and then a plan on how you can execute that strategy. And as investors undertook this process, then they started to ask questions of companies, and then companies needed to revise their strategies to ensure that they're meeting the needs of their investors if they wanted to have access to grow or to execute their business strategies. So the market moved to something called materiality, which is because when you think about ESG topics, they can be really broad. But what's most important is that we talk about what's material for that organization. And today, I would say, as much as investors are still major stakeholders who are pushing this movement towards ESG or sustainability, customers have become the major driver today. So it's a balance between, you've got two major stakeholders today both your investors, but equally your clients are asking or demanding that you can demonstrate what your business strategy is and if you're reducing your carbon emissions or how you're taking care of your employees, things of that nature. So that's probably one of the biggest shifts that we have seen. And most of that's been, I would say, in the last 2.5 years, perhaps.
To your point, I think with the changes of regulations and depending on where you're operating, there are different timelines. We know you mentioned in Europe with CSRD, with California with the different state bills, SEC kind of starting and then stopping. How has the regulatory landscape and the pace at which it's changing, how does that impact your work? And whether it's the investor community or the companies, is it really kind of helping bring everybody up to speed and to keep them updated on those changes?
Well, I mean, really what we're seeing is a drive from voluntary to mandatory reporting today, which means that businesses need to take these issues seriously. And it's really that they need to develop not just a report, but appropriate processes and oversight and then auditing of this information and data today. And that's probably, as we move to mandatory, that's one of the biggest shifts that we're seeing. And this is something that the investor community has been pushing for, I would say, for well over 10 years or more. So we're getting much closer when we come to, in particular, something like climate change but to your point, CSRD is beyond climate change, and it's anything that can have an impact on the business, financial or otherwise. So, and I would just say, let's even with the SEC, does it move? Does it not move? Any companies in the U.S. that sell products outside of the U.S. and have clients asking for information from a competitive positioning on that part of the equation, that needs to be considered as a business. So it's not just that there's a regulator that's saying you need to do something, that you do it. Good and growing businesses are going to move on these things because their clients demand it, or their investors are, if they want that capital to grow. So the regulators are a great complement, I think, as they set the rules based on standards that are being developed. And an example here in Canada is that we have the IFRS, International Sustainability Standards Board, has put forth some global standards for disclosures. Here in Canada, we have our own Canadian Sustainability Standards Board that is reviewing those global standards and will determine if Canada should adopt those international ones or whether we should adjust them for our own economy. They have indicated that they're about to come back to the market shortly with their recommendations. And once they've done so, we anticipate that the Canadian Securities Administrators will then move and direct public companies on what they need to disclose and what framework to use. So we're moving to a place that we're going to have the clarity of what the framework is on what you need to report as a public company. But again, public companies or private companies don't need to wait for the regulator. They can voluntarily disclose this information. The standards are there. They've been in the market. We're seeing a lot of demand from organizations to help them prepare. And maybe there's a tweak here and there, but generally the consensus is there. And I think that's one of the biggest things is regulators are a piece of the puzzle. But if you want to compete today, you can't wait for regulators. And so even if the SEC is a stop and go, at the end of the day, we are already seeing, we do a study of the disclosures of the TSX once a year, and we're already seeing that companies are moving to disclose this type of information with or without, a regulator saying that they have to do it. So if you want to lead, you're not going to wait for the regulator. You're actually going to try to get in front of the regulator.